Our today's topic is on bank reconciliation statement. That is how to prepare bank reconciliation statement for class 11th ncrt. All the business organizations keep a record of their bank transactions in a cash book under bank column. On balancing, the bank column in cash book shows the balance in bank at the end of the period. The bank also records firm's bank transactions. Theoretically, balance shown in firm's bank column must match with that of the balance shown by the bank. But often these two balances, that is balances in firm's book and the balance shown by bank in firm's bank account, does not match. Hence, cashier has to ascertain the reasons for such differences. For this purpose, cashier of the organization take the following actions. Number 1. Ensure that the cash book is completed up to date. Number 2. Obtain bank statement or a bank passbook for the set period from the bank. Match all the transactions in the organization's cash book in bank column with that of the transactions shown in bank statement or bank book. Note down all the entries which are appearing in bank column of cash book and not appearing in the bank statement or bank passbook, and also note down all the entries which are appearing in the bank statement or bank passbook and not appearing in the bank column of cash book. How to prepare bank reconciliation? Now here I have taken one example, and the below part is the statement that is to be prepared. This is the format of the bank reconciliation statement. Now illustration shows bank balance as per passbook, that is 60,000 rupee, checks issued but not presented for payment amounting to rupees 8,000. The bank had directly collected dividend and credited to the bank account but was not entered in the cash book amounting to rupees 9,000. Bank charges not entered in the cash book amounting to rupees 600. A check deposited but not collected by the bank, rupees 7,000. Now how we will solve this question? See, the heading of the statement will be bank reconciliation statement of Mr. so and so, in this case that is Mr. Rawat. So we'll write bank reconciliation statement of Mr. Rawat as on 31st March 2019. There is a particular column. There is a column writing for the unit of the rupees, unit of the amount, that is the rupees, maybe dollar, anything else. First inner column for writing the inner amount, and then the external column, outer column. First line will be balance as per cash book, that will go to the outer column, 60,000 rupee. Add. Will add following two items from the above: checks issued but not presented for payment amounting to rupees 8,000 and dividends collected by bank 9,000 rupee. So the sum total of this is 17,000 rupee. 60,000 plus 17,000 will give you the total of 77,000. From this total we have to deduct what? Number 1, check deposited but not credited by bank amounting to 7,000 rupee. Bank charges debited by the bank amounting to rupees 600. So the total of 7,000 plus 600 is coming to 7,600 rupees. So 77,000 minus 7,600 will be 69,400. Now, in case one has to start from closing balance in cash book and reach to the closing balance as shown in passbook, this can be achieved in case starting from balance in cash book. We have to add all the transactions credited, that is deposited by bank and not appearing in cash book, and all the transactions credited, withdrawal, shown in cash book and not appearing in bank statement. These two types of transaction are to be added with that balance, with the balance of bank shown in cash book. From that sum total, we to deduct all the transactions debited, that is withdrawal by bank and not appearing in cash book, and all the transactions debited, deposited in cash book and not appearing in bank state. Note: debit deposits in cash book will be shown as credit deposits in passbook, and credit withdrawals in cash book will be shown as debit withdrawal in passbook. There is a second note also. In case one begins from plus positive balance in cash book and after addition and deduction it remains positive, then it will remain the positive balance as per passbook also. But in case one begins from plus positive balance in cash book and after additions and deductions it becomes negative, then it will become overdraft as per passbook and vice versa. Now this is the second case where one has to start from overdraft balance in cash book and reach to the closing balance as shown in passbook. This can be achieved in case starting from balance in cash book. We have to add all the transactions debited, withdrawals by bank and not appearing in cash book, add all the transactions debited, deposited in cash book and not appearing in bank statement. From this we have to deduct all the transactions credited, deposited by bank and not appearing in cash book, and also all the transactions credited, shown in cash book and not appearing in bank statement. These following notes I have already explained in the previous section. Now this is the third case where one has to start from positive balance as shown in bank passbook and reach to the closing balance as shown in cash book. This can be achieved in case starting from balance in passbook. We have to add all the transactions debited by bank and not appearing in cash book, all the transactions debited in cash book and not appearing in bank statement. From the sum total we have to deduct all the transactions credited by bank and not appearing in cash book, and also all the transactions credited, shown in cash book and not appearing in bank statement. The notes given below has already been explained. Now this is the fourth case where one has to start from overdraft balance given in passbook and reach to the closing balance as shown in cash book. This can be achieved in case starting from overdraft balance in passbook. In the balance we have to add all the transactions credited by bank and not appearing in cash book, and also all the transactions credited, shown in cash book and not appearing in bank statement. From these two, from the sum total of these two, we have to deduct all the transactions debited by bank and not appearing in cash book, and also all the transactions debited in cash book and not appearing in bank statement. Following note or notes has already been explained. Now, what is meant by bank balance and overdraft? Positive balance in cash book, bank column and overdraft. When deposits exceeds withdrawal in the cash book, it reflects positive balance and is denoted as debit balance in cash book, and bank statement shows this balance as credit balance, positive balance. Second case, when withdrawal exceeds the deposits in cash book, bank column, it reflects overdraft and is denoted as credit balance in cash book, and bank statement shows this balance as debit balance, that is a negative balance. Balances from where bank reconciliation to be prepared. First is to prepare reconciliation statement when cash book is showing positive balance. Begin from cash book balance. Or to prepare reconciliation statement when passbook bank statement showing overdraft. Begin from passbook overdraft. Third case, to prepare reconciliation statement when cash book showing overdraft. Begin from cash book overdraft balance. And fourth case, to prepare reconciliation statement when passbook bank statement showing positive balance begin from passbook balance. Now, to prepare reconciliation from cash book balance. In this case, the first line will be balance as per cash book, positive, debit balance. So that figure will come. Then in that we have to add checks issued but not presented in bank for payment. Checks issued, dishonored by bank. Amounts directly deposited, credited in bank account. Interest and dividends collected by bank. Checks deposited for rupees 5,000 entered as rupees 500 in cash book. So the difference between 5,000 and 500 is to be added back. So these are the 5 cases A, B, C, D, E are to be added in the positive balance of the cash book. From that sum total we have to deduct what? Checks deposited into the bank but not yet collected by bank. Direct debit done by the bank on behalf of the customer. Direct payment made by the bank on behalf of the customers, that is our organization. Checks deposited, bills discounted, dishonored. Interest and bank charges debited by bank. Checks deposited for rupees 500 entered in cash book as rupees 5,000. So deduct the difference, 5,000 minus 500, 4,500 rupees. The resultant figure of addition and deduction plus opening will be the balance as per passbook or bank statement. Now this is the case when one start from the cash book overdraft balance. There is the credit balance in cash book. We have to add the following A, B, C, D, E, F. 6 types of transactions. These are the category of transactions. You should not confuse with the words used. You should be able to fit in your transactions in these 6 lines, and such type of transactions are to be added with the overdraft balance, and from that you have to deduct 5 cases given under A, B, C, D and E. You have to club your all the transactions which may be combined in these 5 cases A, B, C, D, E. That is to be deducted, and the opening balance plus additions less deductions, the resultant figure will be overdraft as per passbook or bank statement. Now this is the third case where one has to start preparing reconciliation from overdraft balance given in passbook. There is the debit balance as per passbook. So the first line will be the balance given in the passbook as debit balance. In that we have to add following 5 transactions given in A, B, C, D, E. We should be able to club the transaction under these 5 category, and they are to be added with the debit balance given in passbook. Add these transactions, out of that sum total we have to deduct the transaction coming under F, G, H, I, J, K. So again the transaction you should be able to club under these lines, deduct these, and the resultant figure will be balance as per cash book, overdraft balance. This is the fourth and last case where one has to begin preparing reconciliation from balance given in passbook. So the first line will be balance as per passbook, credit balance amount. In that balance we have to add the transaction that will be clubbed under these 6 lines given in A, B, C, D, E and F, and from that sum total we have to deduct the transaction which may be clubbed under A, B, C, D, E, and the resultant figure will be the balance as per cash book.